Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. Looking forward to teaching the COT report tonight and going over some updates and with the COT report and going over the application of it and how it works. One second. I just need to post this real quick. I'm just going to remind everybody, I'm working on getting the calendar fixed so it changes to everybody's time zone. So I'm just going to let everybody know it's the COT report class starts right now. Everyone. Let's see the go to the calendar to watch. Okay. Awesome. Okay, cool. So we're good to go. All right, guys. Well, before we get started, need to go over a disclaimer before we get into any instruction. As always, I need to remind you about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right. So this is my favorite class of the week. I love teaching the COT report just because it is such a great strategy and there's a lot to learn. And it's my most consistent strategy. Traded it the longest, got a great track record with it. So love the COT report and I'm excited to share it. So for those that are new, and I know some of you are watching this in the recording, some of you are brand new, some of you are not, but I do need to share some of the basics of the COT report. So the COT report stands for Commitment of Traders, and it comes from the CFTC .gov website. So we're going to head over to cftc.gov. And this is a USA financial regulatory authority. Okay. So this is a commission of an official arm of the US government, and they regulate the commodities and futures market. And so they look for things like fraud and scams, and they also do a lot of other things. And one of their responsibilities is to distribute the COT report every day to create transparency in the marketplace. And so when you click on Commitment of Traders right here, where it says market data and economic analysis, this is where you can find the COT reports. What the COT report does is it tells us as retail traders what the banks have bought, specifically participants in the futures market who are classified as leveraged funds. And those are your banks that trade Forex and futures and commodities. And we want to know what they're buying and what they're selling. And so when you come here, there's actually quite a few COT reports. The one we use is this one right here. It's called the Traders and Financial Futures Report. You click on this, and this is what a COT report looks like, okay? And you'll see here there's different participants. You have the dealer participants, asset managers, leveraged funds, and there's a few other categories. And like I said before, the ones we really care about is the leveraged funds, because leveraged funds are institutions that actually trade like to make profits. They don't use it for any other purpose. So when you're looking at these other participants like asset manager, they trade futures and forex and commodities with the purpose of hedging against their other assets. So these are institutions that have tons of different things that they manage. They've got stocks, they got crypto, they've got real estate holdings, bond holdings, futures, commodities, they've got everything. And sometimes one institution from another might focus on another thing or another thing. And so they're able to use the futures market as a way to hedge against some of their positions. So if you have too many positions, let's say you've bought too much oil, maybe you want to hedge against your oil shares or your oil holdings. You can actually do that in the futures market. You can either put a short against oil, or you could do that by shorting the Canadian dollar, because there's a peg to the Canadian dollar in oil. So you can put a short on a futures Canadian contract, right? For example, another example is the Australian dollar is often pegged against gold. And so when gold goes up, the Aussie typically goes up. And when gold goes down, the Aussie typically goes down. And so if you have a lot of gold holdings, one way to hedge against it through a different instrument would be to short a um, Aussie futures contract, right? So that's what asset managers do. Dealers are they're what we call market makers, but it's very important to understand what a market maker actually is. Market makers are not the secret people that are really good at trading. No, market makers and dealers, they're the same thing. And what market makers do is they create liquidity for other traders, whether that's the retail trader or if that's the leveraged fund participant who we are monitoring, right? That's what dealers do. Dealers, like I said, these are brokers. So when you, for example, let's say you deposit funds with Owanda or Forex.com or Osprey or TD Ameritrade or whoever, and you want to buy the euro or the pound, doesn't matter. Okay. When you deposit funds there, they need to be able to have liquidity, or they need to have the trade available so that you can take that trade. So if you execute a buy on the euro, they need to have euros ready to go so that you can buy them. They have to already own it. And if they don't have it, then they're not going to be able to service your request, right? That's what's known as a liquidity provider or a or a broker, right? So so yeah, you want to be with a broker that's going to have that. I mean, obviously, if you're just a retail trader like we are, chances are they're going to have liquidity for whichever direction you want to go, right? But that's who a dealer is. And you can actually read up on this when you actually go to their site on the homepage, not on the homepage, just on the homepage of the actual COT report. So I'm not sure why this is frozen. I'm frozen. Okay, there we go. Okay, so when you're on the Commitment of Traders report page, which can be found here, you go down to explanatory notes where it says Traders and Financial Futures explanatory notes. If you click on that, it's going to pull up an Adobe PDF, which is really, really cool. This is definitely worth taking a look at when you get some time. Um, it explains, you can actually zoom in and read a little bit about each one. So this tells you what the Traders and Financial Futures report is, and it tells you what who the different participants are. And like I said, there's 4 different participants, and you can read about their classification. And then here's what a dealer is. We already talked about who a dealer is. They're known as the sell side of the market. They're selling liquidity to the marketplace, which is basically a broker. Okay. Um, and then you have the asset manager side, which are usually institutions that hedge, and you can see including pension funds, endowments, insurance companies, mutual funds. Portfolio management predominantly are institutional, and they take a lot of hedge positions. Right here in leverage funds, you can actually read says the strategies may involve taking outright positions. That's keyword right there. Um, or arbitrage. It also says that they are engaged in managing and conducting proprietary futures trading on behalf of speculative clients. And now this is also keyword right here, speculative clients. So they're often taking positions um, as a speculator. They're speculating positions, and they're pretty good at it. Let's see, let's read more about this. Typically, and hedge funds and various types of money managers, including registered pools, okay, operators, unregistered funds, the strategies may involve taking outright positions, which is that's the keyword right there. Outright, a couple of keywords, outright positions, because when you take an outright position, what does that mean? Outright. Well, an outright position is a position that's not hedged with the sole purpose of being right in the market. You know, if I outrightly buy Tesla, I'm saying that I believe Tesla is going to go up. If I outrightly buy Apple, it's because I believe that's going to go up. Or if I buy the euro or the pound, I believe those are going to go up. And that's what they're doing. Um, these leveraged funds. So from my research and from what I can read here, and you guys can read this as well, these would be the best people to follow. In the past, not reportables, these are the people you want to follow, leveraged funds. In the past, I've followed other ones like the dealers, which at this point, after studying it seems kind of silly to follow the dealers. Why would you follow dealers? Because again, those are brokers, and they're not there to make money as far as, well, everybody's in it to make money. Let's put it that way. You want to follow the people that are in it to make money the way you are making money, right? So dealers make money different ways, right? Brokers make more money selling commissions and things like that, and they have lots of other ways to make money, but they're not taking outright positions in order to make money. They're in the job, they're in the business of getting clients and getting people in their pool of book of business and selling commissions and things like that. Asset managers, their sole purpose is to make sure that these pension funds grow continually. And if you research into it a little bit more, you'll find that a lot of the times they use the futures market to hedge their pension funds. So a lot of pension funds have bonds. A lot of pension funds hold tons of bonds, and they've got a lot of there's a lot of stock and equity holdings, and they can be risky. And so if you want to hedge against that risk, you can use the futures market to do that. So that's what these guys do. So that's not exactly who we are trying to follow. So that only leaves leveraged funds, which is exactly what, like, we already established why these are the guys you want to follow. So when we go back to the COT report, let's go back here, and you click on this long format of the financial futures report, which is right here. And you click on this, and when you can see the different categories, you got dealer, asset manager, leveraged funds. Now all you have to do is just focus in on who, like, what is leveraged funds doing, right? Since we know that this is who we're supposed to follow, what are they doing? So you've got, right here on the very top, very first one is the Canadian dollar. You can see Canadian dollar right here. It's not Canadian dollar against, US dollar, or Canadian dollar against the Japanese yen or the British pound. It's just the Canadian dollar as its own sole entity, okay? Which is great info. You're going to see why this is great info in just a moment, especially for those of you that are kind of new to this. And by the way, if you are new to the program, let us know where you're from in the chat box. I do see some new faces with us here today live, so feel free to let us know what state or what country you're from. Just throw that in the chat box so that we can see who you are and welcome you to the program. We won't ask you to sing, so no worries there. We won't have you turn on your microphone. Plus, I don't think you even can. So, but yeah, let us know what state or what country you're from in the chat box. That'd be awesome. And again, also just want to give a shout out to those watching this in the recording on the calendar. Want to just say hello to you guys. So, okay, so Canadian dollar is right up here at the top, right? And 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 then you can see this is each number represents $100,000 of currency. So we look at this in number of contracts. So these are contracts. So when you can see that there's 46,911 contracts long on the Canadian dollar, that means that it's basically 46,911 multiplied by $100,000, and that's the dollar amount of currency that leveraged funds currently holds on the Canadian dollar. Now, this is not international holdings. These are participants that are registered with the CFTC. Okay, so this isn't all Canadian dollars outstanding. This is just whoever in the United States represents leveraged funds. That's who we're looking at right here. Okay. And that's all we need. We're just curious. I mean, they're pretty good. We'll go with them. They're pretty good at what they do. So we'll follow them long term, right? And they're not always right. And we're going to have that conversation in just a little bit. Right now, the conversation is just making sure you guys know how to find this and how to use it and why it works, right? At least on a long-term basis, why this is such a good way to trade. Okay. It's a unique way to trade. Not a lot of people teach people how to trade this way. I mean, there are several. I know I actually follow lots of people who use the COT report. There's actually quite a few mentors and teachers out there that use the COT report, and a lot of us trade it the same way or very similar. But it's a fantastic tool, and you'll find out why if you're new. Ivan from Orem, Utah, good to have you. Gabriella from Texas, good to have you here and welcome. It's awesome to see you guys. But yeah, so you're looking at the long side, and for those of you that are new, long just basically means buying. So that means they're hoping the Canadian dollar goes up if they have buy positions. And when you go short, you're hoping the market goes down. It's also known as just a sell, right? That's what a short is. So you're hoping the market drops, right? So of all the outstanding positions, most of these banks have 46,000 contracts long, and that's much bigger than the 33,000 short right now. So there is an interest to send the Canadian dollar higher over time. Will that happen today or tomorrow? Not necessarily, but overall, that's their expectation, is that the Canadian dollar will increase in value. Okay, so that's what you're looking at there. Now you can search through here. By the way, this report is huge, so you can get lost. So if you want to navigate through this report, you just do a Control F on your keyboard. If it's a desktop, Microsoft, you just do a Control F. If it's a Mac, you do Command F, and then you just search the currency you want to find. So if we're trading the British pound, we just search GBP, and it's going to take you to the British pound over here, and you can see that show up. So you got British pound, and then here's the number of contracts long, which are buys, and then you have shorts over here, which is 39,000 contracts short, right? So what does that tell you? Well, you've got a lot of people buying the British pound, right? And not as many short, right? There's definitely still a lot of short, but there's a lot more long. So what do you think the interest right now is as far as the banks go? Do you think they want the pound to go up or down? Probably up, right? I mean, it's not guaranteed that it will, but yeah, I mean, that seems to be what their focus is, right? And then, oh, I forgot to show you guys this. Just below that, look at the total change. This is the change in week to week positions. So you have the number of long positions positive change, and then you have the number of short positions changed the previous week. So right now it looks like they've added long positions and they've added short. They're adding a few more short positions right now than longs. So it does look like maybe that could be changing soon, but by and large, they still have a lot more long positions than shorts, right? And that's what you want to focus on. Okay, so once I get this information, which by the way, this comes out once a week at 4 p.m. Eastern every Friday. So if you go to that site, cftc.gov, you can get this once a week on Friday at 4 p.m. Eastern, right? And you can get it right here. And it's totally free, and it's been around for decades, right? So it's pretty cool piece of information, and a lot of people don't realize that this is free and available to them to use how they want. It's totally free and open to the public. Um, and it's funny, I think people internationally actually like to use this more than even people in our own country here in the United States. So anybody can use this. It's not just limited to those in the United States. Just because it's a US regulatory authority, doesn't matter. Anybody can check this out, which is pretty cool. Then what we do is on Saturday, when I get some time, Friday night or Saturday night, I go in here when the new report comes out and I plug it into my world famous journal, right? You guys all have access to this. If you don't have access to this, let me know. Just email me or send me a Telegram message, and I'll make sure that you get access. I'm usually pretty good at making sure that everybody who's a member of the program has access. We do audit this, so if you do leave the program, unfortunately, you will lose access to this journal, as well as all the other classes and Telegram channel where I post these trades. But so long as you stay a member, you'll have access to this, and any updates we make to this, you'll have access to. In fact, this week it would have, a lot of people think like, why do I need this if I know the strategy? Well, this week we actually made an executive decision on the Canadian dollar that actually paid us out better. because we went with the Canadian dollar instead of the New Zealand dollar. We're going to talk about that later too, as well. But yeah, this is pretty cool. There's a lot of stuff on here. If this is foreign to you, no worries. I'll help you understand it. It's actually very easy to understand once you know what's in here. Basically, what we're trying to do with this journal, because the COT report tells you the raw information, but now we need to interpret the information that we're given from the COT report. Because one of the issues you run into is if you have the information, that's great, but how do you know how strong a currency or currency pair actually is unless you are given more details as to what the banks are doing, right? And that's where this journal comes in, is it actually interprets how how strong a currency actually is, right? So how do we do that? So for example, I showed you guys earlier that the British pound is quite long right now. So we had 79,000 contracts long on the pound per the COT report and 39,000 contracts short. Well, that turns out that 67% of all of all positions are long and only 32 or 33% are short. Okay. How did we figure that out? Well, it's just a simple calculation, right? So if I click in here, I'm just taking the number of long positions divided by the sum of all positions, and I just multiply that by 100, and that gives me a percentage. So of all the positions out there that leveraged funds has on the CAD, whether they're long or short, 67% of them are buys, long positions, right? Well, that's pretty significant, right? Because that means they have a pretty strong bias to buy this pair right now. And only 32 or 33 are selling, right? I mean, yeah, that's a good amount, but is that really? I mean, if why would you want to go short if most of them are buying it, right? I hope that makes sense because that's what we're doing each week here. Okay, we're trying to pinpoint which one's the strongest and which one's the weakest. Let's look on the other side. Over here, you look at the Japanese yen. This is a pretty stark example. You have 69.72%, 73% are short positions. So of all the positions on the Japanese yen, almost 70% are shorts. That's a pretty strong bias. That means they're definitely trying to send the Japanese yen lower, and they've been doing that. What have they been doing for the last 3 or 4 or 5 months on the Japanese yen? You guys know it's mostly been to the downside for the Japanese yen, right? The Japanese bond market's been in turmoil for months now. It's been quite the scene actually, and it appears to be getting worse. So it makes a lot of sense why we're shorting the Japanese yen, right? Um, Another one that is recent, it's only been this way for 2 weeks, is the dollar. The US dollar is classified as a short. There's a lot of interest to sell the dollar, the US dollar. We'll see if that plays out over time. Um, but that is the game plan with the US dollar right now, is to send it lower. Again, I don't know if that's going to be that way forever, but at least for the last 2 weeks, that's been the game plan, and it appears the banks are trying to send the dollar lower, right? So so now what do we do? So now that we know these are the strong currencies and these are the weak currencies, what we want to do is we want to pin the strongest currency against the weakest currency. Okay, why do we do that? Because remember, this comes from the futures market, which is a totally different market from Forex. Although in the futures market, they do trade euro contracts, pound contracts, yen contracts, dollar contracts, and so on. But when you trade in the futures market, you don't have pairs. You buy and sell individual currencies. In Forex, what do? We trade these over here, pairs, right? We buy the British pound against something else. We buy or sell the US dollar against something else. So you're pinning one currency against another currency. In Forex trading, that's how it works. You buy this pair, that means you're buying one currency against another. So you're trying to figure out which currencies, and this is where you make more money with Forex. If you can ideally find which currency is going to outperform another currency by the biggest margin, that's how you'll make the most money. Because typically what happens is if you trade a strong currency against a currency that's weak, then it creates the best exchange. And when you create an exchange, it creates these very sharp moves in the market. The volatility increases and you create moves that are more fluid and fast moving, right? You don't get as many consolidations typically. Typically the market just goes in your favor. Does it happen all the time? No, but that's the concept and that's what we're trying to achieve every single time we take these trades. So I typically pick the top 3 long positions or the top 2 shorts, or if I can find 3 very short positions, I'll go top 3 short and then 2 long. The reason why I do that is because it's always going to give me a combination every single week of 6 trades. And so every week I'm taking a basket of 6 total positions. We could do top 3 long and top 3 short, but then that would give us a total of 9 trades, and that's a lot of trades to take during the week, and it's a lot of work to place 9 trades. And I don't think it really gives you that much help to trade 9 trades. You really just want to focus on the top 3 long or short, and then the top 2 long or short as well, and that gives you a combination of 6. Why does it give you that combination of 6? Because you're taking the strongest currency, pitting it against the worst currency, the most weak currency. Then you're picking the second most weak or strong currency and pinning that against the weakest currency. And you do that until you've made every single combination possible, which gives you a total of 6 trades. Now, this up to this point, guys, some of this might be pretty confusing especially if you're new. Don't worry. I actually send these trades directly to you. The reason why I'm sharing this information is because a lot of people want to know what's under the hood. They want to know, how am I doing this? How am I figuring out these trades? Because it seems like, I don't know about you guys, but well, I feel like most people would be this way, but wouldn't you want to invest in something you understood before investing into it, right? That's why I teach this. I'm teaching you exactly how we're figuring this out, the method, the strategy, the reason behind everything. Because if you can understand it and the goal of it, then you're more likely to have success, right? Nobody wants to just take somebody's trades or somebody's signals without understanding why. Wouldn't it be cool to understand what's going on behind the scenes? Yeah, I think all of you would agree. And that's what we're doing here. So if it is confusing, feel free to come back and watch the recording. That's what it's for. We also teach this every single week. I try to add different value in each class. So I'll maybe focus on something else, maybe that you haven't heard of before, because we do get a lot of people who come back but already know the strategy. And I want to make sure that those folks, you guys get value too. But some of this is just basic repetition. We want to make sure that you guys really, really, really get this, right? Okay, so another analogy of this right now is a great time to talk about this because football season just started, is we're just trying to pick the strongest currency and we're trying to pin it against the weakest currency. So right here, right now is, right now the strongest currency is the pound, right? I follow college sports, college football, and right now there's some really, really good teams in the country. You've got Georgia, which is perhaps the best team in the country right now. You've got other teams like Ohio State that's looking really, really good this year. There's some teams out west that look good that could have some potential, like USC and a few other schools out west that are looking pretty good. Those are good teams. They'd be very hard to beat, right? And usually it would require another really, really good school to beat those types of teams, right? So if you were to bet, like for example, if Georgia, which is one of the most elite football teams in the country right now, if they were to play a team that's not very good at football, or like, another good one, if maybe you're in Texas and the Longhorns look pretty good right now, they're looking pretty dang good. I forgot who they're playing this week. Oh, they're playing Alabama, that's right. But last week they played a team that wasn't very good. And they won by a lot, right? Um, well, let's actually use that example. So Alabama and Texas, they're great, great football teams. It's going to be a toss up on who wins, right? because they're both fantastic teams. That's not a great bet because if you bet on those teams, it's a coin toss. Like one person could win, the other one could lose, right? Um, who knows, right? But if you invest in, um, like if you bet, like let's say Texas or Georgia, one of those really good teams, plays a team that's not really good, it's pretty easy to who's going to win, right? You just bet, oh yeah, Texas is going to win, or oh yeah, Georgia's going to win because they're really, really good teams, right? So that's the way, um, that's it's an easy bet. That's what we're trying to recreate, but with this. Every week we're trying to find who's the best team, and we want to pin the best team against the worst team because that's the most clear cut, very likely possibility that there's a good chance to make some money with that, right? So what I do is I pin, this week, for example, the pound against the yen is the best because right now the British pound is very much bought up and the Japanese yen is sold off, right? In a big way. So if you pin those two together, you have the strongest currency pinned against the weakest currency. So that's probably a pretty good option, right? Another good one would be the pound against the US dollar because the dollar is a little bit weaker right now, or looking to become weaker. So pinning the pound against the dollar would probably be a good one. The euro against the yen because the euro is stronger right now. The yen is really weak. That's another good combination. So we're just trying to find the most obvious matchups for the week. And like I said, I like that sports analogy because that's what we're doing. Um, Best team versus worst team, easy to bet, easy to win with that type of thing. But if you were to pin, let me give you an example. Like the euro strong right now and the pound strong right now. If you trade the euro against the pound, it's kind of a toss up because they're both strong. Like maybe one day one wins, the other one loses the next day. It's a little bit of a toss up, right? It's hard to define that. So really, really important, just something I wanted to share. Okay, so once we're in here, guys, once we're done, we create these top 6 trades of the week. I post these in Telegram. So here's the Telegram channel. You should all have access to this. If you don't have access to this channel, let me know. But it's just called Trading with Steve FX. This is where I post everything, and this is tied to your membership. So if you're a member of the program, you'll have access to this. If you leave the program, you will lose this. Um, and what it looks like is every weekend on Saturday, I post this. I post this every Saturday night. I give you the top 6 trades of the week. So you don't have to go through that process of what we just did. If you want to do it on your own, that's fantastic. I'd love for you guys to do that on your own so that you can become proficient at this on your own time. But in the meantime, while you're learning, there's nothing wrong with just taking these top 6 trades and just trusting me that I did my job right. There's nothing wrong with that. So I take each trade. What we do is I take each trade on Sunday night. I go into my trading accounts and I pull up each currency pair and I take each one and I make sure I use these stop losses. There's not an actual number to your stop loss. It's an actual pip amount. So you're going to have to put your stop loss, the appropriate amount of pips away with this. Okay. And you'll notice that the stop losses do vary quite a bit. And the reason for that is because not every currency pair is created equal. Some currency pairs have much bigger average daily ranges than others. For example, the pound yen has, I think, the largest average daily range. And right now that's around 195 pips. So what that means is if you have an average daily range of 195 pips, that means that with the pound yen, from its lowest low to its highest high during a 24-hour period, that's 195 pips, right? During 24 hours. There's other currencies like the USD CAD. It has an 81 pip average daily range. So what that means is that the USD CAD moves up as high as 81 pips and as low as 81 pips. So the difference between the lowest low and the highest high of a 24-hour period would be approximately 81 pips on an average, right? So that's why these pips vary, is because we're using an average daily range for our weekly stop loss. And you might say, well, don't we need a weekly average daily range? Turns out you don't need that big of a stop loss. Like that would be in the many hundreds and hundreds of pips for a stop loss. And there's no need to risk that much money. That would be, hundreds and hundreds of pips per trade, and you don't need to risk that much. If the trade goes against you that far, it's probably not a good thing to be in that trade, right? In fact, that's one of the things we're trying to backtest and work on going forward, is if we can find ways to lower these stop losses, because the tighter you can make your stop loss and still get away with the trade successfully, the more lucrative that trade will be. Because if you're tightening up your risk, then there's a good chance and if you win, then there's a good chance that you'll make a lot more money on that trade. But for now, this is our method, and we've done this method for a long time, and it's worked very, very well. Now, we do have losing trades. We don't always make money when we do this. And actually, before I get into that, real quick, last thing I do when I take these trades in my trading account is I use a half an average daily range, okay, as my trailing stop. So I have a stop loss that's 195 pips on this pair, or 127 on this one, and 167 on this one. And then half of those amounts is what I use for my trailing stop on MT4. So when I go into MT4, I set up my trailing stop and I do a half an average daily range. Now, I don't think we have time to get into this, and it would take a lot of time and effort to go into it. And I don't want to confuse everybody. But if you need help doing that because you've never traded this before, you need to watch this video. And I'm going to show you which one it is. If you go to your members tab here on the website, hover over members and go to basic training videos. If you come over here, there's a video at the very end here. If you've never taken a COT report trade before, or let's say you're struggling to take your COT report trades and you don't think you're doing it right, you need to watch this video. It's this last video in the basic training. It says, watch me take the COT trades, my prop firm account, this very last one. Okay. This is a video of me about 2 months ago actually taking these trades in my own account on a Sunday night like normal. I'm acting as if I'm somebody like you or myself taking these trades in my own account, going through the process of using a lot size calculator, going through the process of plugging in the stop loss, actually taking the trade, going through the process of putting in a trailing stop, and then closing the laptop and letting the trades go for a week. That's all included in that video. It's about 40 minutes. And I do go a little bit slow in the beginning. So if you want to fast forward to maybe closer to the end, that's when you're going to see more of the content of me taking those trades. Okay. So definitely watch that video. If you're still hung up after watching that video, definitely talk to me, send me a message. If you're on my Forex Pro membership, you can book a call with me where we can meet together one-on-one and help you solve that if you've got some issues. Okay. But hopefully that resource solves a lot of issues right there. In fact, most of these videos I have on here are typically because traders have questions about certain things. And so I want to, and we're going to add to this. We're not done. We're going to actually add a lot more things. One of the new things that's coming out soon, you're going to see another tab here pretty soon. It's going to say strategies, and it's going to have PDFs and resources to every single strategy I trade. That's going to include the sentiment strategy. It's going to include the COT report. It's going to include my price action strategy. It's also going to include the retirement trade, which is also known as the banker's close strategy. We don't trade that much anymore, but that strategy will be included as well. So we'll have a lot of different strategies that you guys can look at if you're looking for something that fits your style a little bit more. You'll often see me focus on the COT report as a strategy. The reason why, guys, is because I know this will make you profitable. Like, hands down, this is the way forward. If you just need one thing, If you're that person that's been out in the Forex wilderness for a long time and you're just like, how in the world do I just make some money? COT report will do that for you, and you will get funded. It will take you some time. It doesn't happen in 2 weeks or somewhat. Well, sometimes it does. I've had people do that, but usually it takes 3 to 4 months to get funded with the COT report. And that is a long time, but that's typically how much a COT, that's actually about how long a prop firm challenge takes to pass anyways. So you might as well just do it with a slow and steady thing that's consistent and will work over time. So it's either that or you continue to wander and try something else, and often those things don't pan out. I've seen it happen over and over and over again. So you might as well just start planting your tree with the COT report and start to see that tree start to get root and go forward, right? Um, let's see. Gabby or Gabriella says it's a great video. I did learn a lot from it. However, the MT4 IC does not match the one you have in the video. I was not able to plug in the trailing stop. Okay, perfect. Yeah, definitely do that, and we'll screen share and we'll get you taken care of. But yeah, great info, Gabby. Okay, cool guys. So that will help you do all of that. Now, this is the other thought I wanted to get back to. So let me know if you guys have other questions, but let's go back to the report here, the journal. Again, you should all have access to this. This is not a get rich quick scheme at all. And those of you that have been trading it a while, you know this. This is a slow and steady, mostly steady. I don't want to say it's slow either, because sometimes you can actually get funded quickly with this. It just depends on when you start your challenge and also how the strategy performs. So I have seen people, I actually had a guy get funded in 2.5 weeks. Maybe it was just 2 weeks even, with the COT report. He just happened to have started his prop firm challenge at a very good time and leveraged well and got it done in 2 weeks. So it can happen. But most of the time, if you're being cautious, it's going to take you 3 to 4 months to get this done. Okay. Um, I've never seen people go over that unless they're risking far less than the recommendation. I risked 0.75% per trade on my prop firm accounts with all 6 COT trades. And then if it's a personal account that doesn't require prop firm rules, I risk a little bit more. I just go to 1% per trade. And that's what I've been doing. Okay, so back to what I was going to say earlier, which is this strategy is, slow and steady. You're going to have weeks where you make a lot, and you're going to have weeks where you actually lose money. And that may sound crazy to some people. Like, some people come to the markets, and it's okay if you had this mentality. I'm just trying to help you understand what realities are. Some people come to the markets thinking that they're just never going to lose a trade ever again. Like, okay, I've joined Trading with Steve. I'm on the good path now. I'm never going to lose again. And that's false. I want to, and I know it might sound sad if that was your expectation. But do know profitability is around the corner, and this is what I'm here to help you get to. You can finally be profitable for the first time if this is what you came here for, and this is what your hope was. I can help you with that. And that's really exciting. You can put a smile on your face because of that. We have a very defined way for you to get there, right? But we do have losing weeks, and that is required. I call them normal losses, and any professional trader has normal drawdowns and normal losses with their strategy. It's very important to know what to expect, because some weeks and some trades do lose money. For example, this week, I've already had one trade close out. I need to double check if any else. I don't know how everything's doing now. I haven't checked in like 4 or 5 hours, but I do have at least one trade that hit its stop loss. My USD CAD trade, unfortunately, did not work out, which is sad because I actually looked at it 3 hours ago and it looks like I'd maybe be profitable. It barely hit my stop loss. And that happens, right? Sometimes that happens, right? I have had some trades that were good this week. I had my pound yen trade closed at its trailing stop with 60 pips of profit. My CAD yen trade made 38 pips of profit this week, and it closed via the trailing stop in the money. So we do have winning trades, right? and there's going to be losing trades. Last week was all profits. All 6 trades made some money. Some of them made a lot of money. The week before, most trades made money here. There was just like some that were not as much. The week before was really great. Here's 410 pips right here. The week before that was really good. 368 pips here. I had one trade that actually made 294 pips, which is really, really cool. That's a lot of pips to make. On the week before that, so that's four weeks in a row of profits, with this week still pending to see if it becomes a profitable week or a losing week. And that, so it could be 5 weeks in a row of profits depending on how this week goes. But then look what happens. Here's a losing week right here. And oh yeah, it's just minus 12. But it was kind of like a break-even week, not a lot going on. But the week before that was terrible. A lot of you guys who have been in the program for a while remember this week. This was terrible. We had 5 trades lose here in the middle of July. That was our last true losing week, was back in July, middle of July. And we had 5 trades lose, and all 5 of the 6 hit their stop losses. And it can feel pretty devastating. You take 6 trades on the week, you're hopeful that they all turn profitable, and then boom, you hit 5 stop losses. There was only one trade that won, and it made only 13 pips, barely anything. So it can feel like a lot. And if you had doubled down your leverage or manipulated your lot size, it would feel even worse, which is why you got to use a lot size calculator, and you need to risk, you need to go through that process each time to make sure that you're not risking more than you're willing to lose, right? So this was the worst week of the year, I believe. We haven't had a loss that big this year yet, but we got through it. We got through it. But imagine if you had started trading that week for the first time and that's all you experienced was just a bunch of losses. Well, most people, I can tell you, would probably just quit the strategy right then and there. And they'd say, well, that sucked. I'm not going to do that again. Right. And then they're going to try something else. And it's too bad, because a lot of strategies can actually be pretty good if they understood their track record, if they understood what to expect with their strategy, and if they were always consistent to do it the same way over and over and over again, and had the discipline and commitment to stay with it, right? So that's how we were. We hit this loser, but what if you had stopped right there? What if you had said, yeah, that's it? Well, you would have missed all of this win, all of this win, all of this win, all of this win, and potentially whatever comes out from this week. And there's more wins coming. I do believe September is going to have a few more good weeks. There may be some losing weeks in there too, sprinkled in. We'll find out. I don't know the future, but based off of history, September is generally a pretty good month. So there's probably some profits in store for this month, in the weeks coming. So I'm not about ready to stop. I don't want to miss that if I have a losing week or two, because that's what happens with a lot of people is they lose money and they're like, oh, I'm done. And then they would have missed all of this. What if you had quit trading that and then come back a month later and said, how's the COT report doing, Steve? And all I can tell you is, well, it's been great. Every single week we've made money, right? And August was just good. There's been months that have been way better. Now, another way to put this in perspective is it averages 185 pips a week. That's what it has averaged over the last year, is 185 pips. So some weeks you'll make more than that. Like last week, we made 300 pips. That's about twice the average. This week right here, we made 158. That's a little below the average. Right here, you made 410. That's above. 368, that's above. Minus 12, that's below. Minus 628, that's well below the average. And then there's a 117 here, a minus 337 here, a minus 20. But then you get a plus 304, a plus 74. This was a fantastic week right here. We made 1,286 right there. A plus 202, there's a minus 113. In May, you had a plus 337.77, a plus 652. and so on. And there's losing weeks and winning weeks all sprinkled throughout here. But the thing works, guys, and that's the important. And it's important to stick with it, especially after a loser, because after a losing trade, a lot of the times the winning weeks start to come back again. You start to make money again, right? All right, guys. What else? Any other questions that you guys have about this? So you guys should all have access to this. Again, if you don't, let me know. I'll actually put the link in the chat box. If you can't get in there, then you need to request to get in. And if you request to get in, I can unlock it so that you guys can get access to it. Um, but yeah, like I said, it's a great system, but it does require some consistency and stick with itness. Um, and it's important to realize that we have its ups and downs, and we plan on those ups and downs, and we do that by having a stop loss ready to go. We use a lot size calculator correctly. We have a trailing stop. Those three things protect the account from losing a lot of money. The other thing that helps keep everything on track is the fact that we only take 6 trades a week. So we keep everything compact into a batch of 6 trades. And if you end up having a losing week, well, then you only lose 6. You didn't lose on 10 trades. You didn't lose on a random 20 trades or 3 trades. It's always 6. Okay. And so if you hit a losing period, you can get through that losing period without losing too much, right? Okay. All right. I think that's about it, guys. That's about all I have to share, unless I see other questions. Like I said, if let's see if there's other questions that come up. So throw your questions in there. For those of you that are on Forex Pro and you guys want to book a call with me, you guys can do that right here in the booking page. If you need extra help, you can book that call here. And then for those of you, and all of you have access to basic training videos, so you can go here and get some more help as well. And obviously you have all the videos on the calendar that you can go and check out, right? Sabrina says, I know this has been asked before, but is there any way with some indicators to find a better entry so when it pulls back, it won't stop you out? Um, yeah, I mean, there's things you can do. We definitely have thought about doing that. Some weeks are just flat out wrong. And so even if you get a better entry, it doesn't matter. You're still going to lose, right? Uh, And I don't know which weeks we're going to lose. I wish I knew which weeks we're going to lose and which ones weren't. So I just have to continually trade it and enter. Also, if you speculate your entry, one of the downsides is if you have let me show you an example on a chart just real quick for those that want to see this. So let's say, oh, so for example, let's go to yeah, let's look at the pound yen, for example. This is one of the trades we took this week. Let's say you speculated your entry back here a few weeks ago. We were buying this, back in here. Um, okay, let's say that this was the start of the week, like right here. Okay. And I am cherry picking a spot, but I just want to illustrate the concept. So let's say you put a buy limit down here, hoping that the market dips first and then it goes in your favor afterwards. But what if the market, like this example, just goes straight in your favor right away? Then you're going to miss the entire COT report trade. So a lot of the times, COT report trades will go in your favor right away, or they won't. And if they don't go in your favor right away, then a lot of the times they'll end in a loss. Okay. And so if you speculate the entry of your top 6 COT report trades, then I've noticed more often you'll miss out on good trades and you'll execute more often on the bad trades, which is not a good recipe. Okay. A few people have tried this and experimented with it. Some have had good results for a little bit, but then those results deteriorate over time when you start to hit a losing period. So from what I've observed, it definitely seems like the best thing to just take all 6 And if it's a bad week, then you are going to lose no matter what anyway, and you just have to stop out and take and lick your wounds. If it's going to be a great week, then you're already in and you're ready to go for the good week, right? So that's why I do that. I hope that makes sense. But doesn't mean you can't either, though, Sabrina. Like sometimes you can get some really stellar entries. I think it'd be worth trying out on a demo account. Let's put it that way. Definitely do it on a demo. Try it out for a while. See if you can find some level of consistency with it. If you do, then obviously carry on. But if you don't, then obviously you can go back to the bread and butter way of doing it. Okay. All right, guys. Well, I really appreciate your attendance today. Thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar. Thanks for coming.